All right. Good morning, everybody. So we had a little bit of a surge after landing into some liquidity on an inside day breakout within the futures. We can see that Asia closed down on the day, but inside of yesterday. So we're now in an IX10 instead of just an inside day breakout 3 days in a row where we failed to get past the February 24th low. So we're just building a base down here at this point. Europe is still down on the day, although it has rallied up a little bit off of those lows. You can see the wicks across the last 5 days now, where buyers have come in to defend these lows, but a real solid resistance across the tops where we've been unable to see a breakout. So they are trying to recover just a little bit, and we are seeing that bleed through into the US markets. An obviously significant move in crude, matching the move that we've seen in the ES. But we're still stuck within this range. And really, this is what we need to get out of before, I want to do anything else. This has been really nice for like some iron condors, especially if you can leg in, right? A legged in iron condor would be at the money put spread along the lows, and then later on an at the money call spread across the highs, or vice versa. Start with the call side and then add in the put side. You do it at the money, you try to get more than 50% of the width of the spread, so that when you add the other side, you can basically add it at any time, and then you have a risk-free trade. Right? You got to love those because, well, there's no risk. You can't lose. Today, it's mostly inventories in the morning session. Trade, balance, good, inventories. We're going to get a little bit of home data. And we have this Goolsby, Chicago Fed president, speaking at, well, it says 2:30 a.m. Thinking that's a little bit of a screw up. Yeah, 2:30 p.m. But it's just a speech at a community college. There won't be any Q&A, so it's really likely that this Goolsby will have no impact in the market whatsoever. So once we get past the additional auctions today, it looks like the afternoon is free and clear. We do have auctions at 11 o'clock. All right, so there's going to be a liquidity event this afternoon at 1 o'clock. It's worth kind of keeping your eye on. So really, I mean, it's not that bad today, all things considered. That doesn't mean that you want to ignore these. They're just an anticipated, normally lower impact event, right? And we can see, you know, is it a high impact event or not by using something like FX Street, right? They have that gauge that kind of gives us an idea of what the anticipated impact could be. Canada's gross domestic product report at 7:30 was supposed to be anticipated to be impactful. If we were to go back and look at when this rally really started to kick off, maybe an argument could be made for that, but I don't think it lines up. So the cool thing is, if you're not sure which economic events have a history of being highly volatile situations, you can use FX Street to kind of get that feel. Just because it says it's a low impact or a high impact doesn't mean that's what it's going to be. It just is showing you historically if it has been really impactful or slightly impactful or not impactful at all. Volume is within our normal range, about 123. It's not bad. It's really all we need this for, just to see if we were within our range. We are, so we could turn that off. We're testing the weekly pivot point again. We kind of crossed through that yesterday and fell back below it, so we're working on it for the second time. We've interacted with the daily pivot point enough times now where it's basically invalid at this point. We wouldn't really want to focus on it for anything. No market maker move today. The ADR is still sitting at 1.6. A full ADR would give us a topside breakout. Half an ADR would get us right to yesterday's high. They're lined up right on top of each other. So we're looking for an inside day breakout to the upside. We already had one to the downside, depending on which low you're using, the RTH low or the Globex low. When it comes to the Globex low, we want to take it all the way back to this candle here. It's 39.73. So we touched the low and we bounced right off of it. We failed to get that inside day breakout. But if you focus on the RTH low, we broke through that and then came back in and made a run across it. Either way, the argument could be made that we're still in a range. We're still right where we were on Friday. We've gone nowhere. We've done nothing. And we need to get going. And this kind of goes to what I was talking about yesterday with, say, buying puts. Continue to get this question about buying puts. Everybody's pretty bearish out there. We're pricing in, you know, a higher end on the curve. We're pricing in to be higher for longer. And the market is headed to the downside while we get all of that priced in. But where's the momentum? I mean, Friday had some reasonably decent momentum, sure, to the downside. If you got in on, say, Wednesday or Thursday, you had a chance to monetize at those lows on Friday. But since then, I mean, we're just really not going anywhere. So when you're going to buy an option, you kind of want to see that there's some momentum behind the market and it's going to move. If your bias is, I'm kind of sort of thinking we might maybe go down, well, that's not momentum. So you're going to want to use something like a call credit spread or a put debit spread rather than just buying some puts. So I want to kind of have this discussion real quick on this textbook point of view. It's been around for a long time. It's where we close, we gap down, we rally back up, but we failed to close higher than the previous high. And then we gap down, we rally up, and we fail to close higher than the previous high. See, they gotta change liquidity, right? And it always comes down to you're either providing liquidity or you're absorbing liquidity. This manipulation in the marketplace, they're either always trying to get you to take what they have because they're trying to unload it, or they're trying to get you to give up what you have so that they can take it. So they got to convince you to buy or they got to convince you to sell. So these little shenanigans where we drop down in the pre-market and then we rally back up and we fail to close higher than the previous day, and then a gap down and a rally back up and a gap down and a rally back up. And what you notice is lower highs, lower lows, lower close, lower high, lower low, lower close. Well, if you put that out on a daily chart, you know what you get? Trend. Lower high, lower low, lower close. So, you know, there's a method to this madness. There's a reason behind what it is that they're doing. You just have to step back and look at the bigger picture. They've got a lot to unload. They've got to convince you to buy it. And if they're going to make this a big move, they want to do it by themselves. They don't want you tagging along. So they got to convince you to sell it. 10-day, 30-minute volume profile. We've moved the point of control now down to our lower area. If you remember, it was up here yesterday. It's no longer up there. We've got this very large, massive air pocket over our head. It's a shallow area that we could move through really easy if we were to get a topside breakout. Something, say, above 40.30, which is a cog line, no less. We get above 40.30, we should have a clear, smooth shot to at least 40.80, 40.75, right around in there. We get this little bump in the road. Get past that, 4100, 4150, and then we'll worry about 4200. At every one of these 50 points, 40.50, 4150, 4100, there's either a call wall, a put wall, a zero gamma strike, significant level of resistance. You can go through publications like Spot Gamma Founders Notes or Tier 1 Alpha's free email in the morning. these levels are repeated every single day. Everybody's looking at these levels. That's how important they are. And it's also part of the reason that we can't just seem to go anywhere. These massive levels, keeping everybody convinced that the fear of missing out is greater than the fear of actually taking a losing trade. Nobody wants to miss out. They're all looking for this massive move. Until that dynamic changes, we're going to continue with this choppy, nasty, sideways market. And I've said it before, as we came into 2023, there were many analysts who said that this was very likely going to be the sideways year, the year of chop. So, buckle up. It's going to be a long, difficult year. We still have that VPOC from Friday. Haven't interacted with it yet, but if we do break to the downside, 39.67 will be on deck. Remember that that is not support. It is just a place where we anticipate a reaction in price. The 10-day moving average, we're headed back towards it. We're not quite there yet. We're still underneath it, but we've rounded the curve and we're headed back towards it. Now, we don't always get back to it, but that's the anticipated action at the moment, is that we're going to come back up and make contact with the 10. NVIDIA continues to hold above that 230 level. It's kind of impressive. But they've stayed sideways long enough now that the 10-period moving average has caught up to it. Make or break time. Yesterday, we had a rally into the 10 for a lot of names. A lot of names, but none of these apparently. So this 10-period moving average is what you're going to want to be watching for on all of these FANG names. Tesla's above it. NVIDIA's above it. We mentioned that yesterday. The rest of them, they still need to get to it. They're kind of struggling with that 4-period moving average. PayPal is getting really lined up for an amazing TRB. Same with Netflix. Netflix is, well, both of them. I mean, they're primed up nicely. Apple's too chunky. Microsoft has got a really solid range. If we were looking for some basing candles, that would fit. All right, IWM hit that 10-period moving average yesterday, rejected. The Qs rallied up towards it, never got to it. Same with the Dow. Made a run towards the 10, never made it. And the same with SPY, made a run towards the 10, but never made it. The only one that actually got there yesterday was the Dow. And all of these, they're all back below that 4-period moving average already. So that's going to be the first level to get past. Got to get past that 4-period moving average, and then another test of the 10. And that's if you're bullish, right? I'm not necessarily bullish out there, but all right, the K-Web names are down again this morning. And the emerging markets, but emerging markets isn't down enough yet. And the VIX is down this morning, which kind of makes sense since the ES just broke above 4,000. Energy's up nearly 1%. And Bitcoin has come back around again. And remember, we're using Bitcoin for a liquidity device. So nat gas continues to hold this newest low that it set. We're above the 20-period daily moving average now. We have a 50 overhead to deal with and a significant level of resistance at 1028. We still don't expect a straight shot here. This is not likely to be, some kind of V bottom play, but instead it's likely to base, chop around. It might try to come back down again, even though I don't necessarily think we're going to get a new low. I think the low that we have is the one that's going to stick. There is a nat gas futures, and it's got a way better chart than this, right? Than this ETF. And it's showing a lot more opportunity than this. But on the nat gas futures, we just hit a significant level of resistance. So very likely going to be a little bit of a pullback either way. Still, this is looking good. I think on the year, this might end up being one of the recovery names that are worth looking at. It was a significant beatdown for sure. So apparently Target had a good earnings, but its forward outlook kind of threw people off. They didn't really like what was said. So the first blush was a move to the downside. Looks like that didn't stick. Remember, we're going to be getting a lot of retail inventories numbers today. So that can also affect this space, not just Target itself. Because of earnings, Target may not have decent options. So, think outside the box. Walmart, Amazon, or even a retail ETF, right? Just to kind of avoid having to play around with these highly monetized and manipulated and volatile options that are getting crushed. If you trade the futures in the overnight hours, paying attention to 4 a.m. becomes really important. This morning at 4 a.m., pre-market trading started in the equities, right? Apple, Microsoft, blah, blah, blah. Bring over the futures. This push began right around 4 a.m. It's not a coincidence. The equity markets opened up. The futures are a basket of the marketplace. Those equity names were bullish. We got to push in the futures. It comes back to the same thing that I say all the time. Watch the clock. Round numbers, half hours. Even if you don't know what the event could be, every half hour and or every hour, there is some kind of data being pushed out. Constantly, always. From grain shipment weights to changes in FX rates. There's so many economic events that go out every hour that just don't hit the news. They're deemed kind of boring, that maybe nobody wants to read about it, right? And the news focuses on eyeballs, getting clickbait, getting people to read the article. So they don't waste their time publishing every single data point. We don't need to know where all of the economic events are at. We just need to know what time it is. All right, these moving averages that we're looking at, they are from the daily chart. They're just supplanted and put here on the 15-minute. So you can see in the overnight hours, we renegotiated the 100 EMA and the 50 EMA. And right now we're challenging the 4 EMA. I guess that was the 50 SMA. The 50 EMA is up here. So if we're looking for a topside breakout today, these two across the top are really important to focus on. It's the 50 and the 200 moving average, and they are in our way. They're resistance. So if we're going to get a topside breakout, we've got to get through these daily moving averages, and they're big ones. If we can get past those to see a continuation of the inside day breakout, we've got to get through the 10-period moving average. We cover the 10 all the time. When we're above it, we're bullish. When we're below it, we're bearish. But we can't be bearish when price is driving towards the 10. So, we approach with a little bit of caution. The idea that we don't necessarily want to take a short unless we've seen a clear rejection a topping pattern, a reversal, something that suggests we're headed back down. And we don't want to have any, full size, large, long positions until we've negotiated through these moving averages. So you can get long, right? Just kind of keep your size positioned correctly so you don't over allocate, get too big too soon. Same thing. These are moving averages from the higher time frame, but now these are weekly rather than daily. So we took the weekly moving averages, put them on the 15-minute chart. We're negotiating with the 100-week. We've still got the 50-week overhead. And if we're going to get an inside day breakout, we've got the 10-week to get through before we can even get that breakout. And we took a solid rejection off of the 4 EMA yesterday. Like a no-go zone. We just did not get through it. I know that seems like a really small moving average to focus on, but it ties right in with surge and momentum, right? It's like the 4-10 combo or the 4-8 combo. First price gets above the 4, then the 8, then the 4 gets above the 8. And that's your surge meter. Surge, momentum, strength, trend. 4, 10, 20, 50, 200. It's where these labels come from. So one level that we need to mark is 50% of last week's candle. 4018 is that 50% mark. Looking at it on the intraday, it's just before we get that breakout. So hopefully you can see that there's just a lot of resistance overhead, right? To get this inside day breakout to the upside today, it's going to take a magnificent level of push. Where's it going to come from? Where's the catalyst coming from? It's got to be news-based. So either somebody's out chipping teeth and says something that sparks a fire, or we get economic data that comes in and sparks a fire. There has to be something to push us through all of this resistance overhead. Otherwise, an inside day breakout to the upside is really hard to chew on, right? Just like what's going to be that catalyst? There's not enough juice or push in the market right now to get through all of that on its own. So we need something. So you really want to watch whatever news aggregate you're watching, right? Finance Juice, whatever. Goldman is still doing their event. It's going to be going on all week. We could hear something from that side. It really wouldn't surprise me, right? So there's always the potential for something to come out in that space. There's the student loan issue hitting the Supreme Court, right? That was on the news today that they were going to take up that argument. Just kind of look around and try to identify where this catalyst is going to come from. All right, looking at the dollar, we really kind of topped out on Friday last week. And sure, we've been kind of playing against these highs, a nice little double top, but the advance kind of just stalled out. And now we're threatening to roll over. So we're looking for an inside day breakout on the dollar. And that should be a bullish catalyst to the market, but it's only going to be breaking down below 104.5. And I don't think that's enough. Last year, when we were way more correlated in an inverse relationship with the dollar, any minor move the dollar did, we seen an equal and opposite reaction in the market in the futures. But they really started to decouple back in November into December. And now it takes a much bigger move in the dollar to kind of bleed over and to see a reaction in the market. I don't think 104.5 is enough. If we're going to see a real shift in the S&P, I think we got to at least get below 104 in the dollar. And that would be like an inside week breakout. All the way back to at least Wednesday's low. Right. And if we're going to focus truly on the whole week, then we need 103.75. So a break below yesterday's low, an inside day breakout, hey, that's a good start. But I wouldn't expect that to galvanize us in the market to like legging up and breaking out. It's just not enough. The thing about the TNX, it's just RTH only. So we kind of need something else. $3.943 this morning. We can use the 10-year futures. So the TNX is going to open gapped up this morning. We could be getting an inside day breakout and actually getting through this top side resistance. It's worth watching really close. If we break down here, rather than breaking up and we start to complete this topping pattern and roll over to the downside, that most certainly is going to be some catalyst for bullish movement in the S&P and the NASDAQ. So that is absolutely worth watching this morning. I think that one's a better tell in the current situation than trying to watch the dollar. Now, if we watch them both at the same time, yeah, it's a good way to go. $3.932, right? Something like that. Yeah, /10Y will get you there. That'd be the 10-year yield futures. Closer resembles the TNX. That way you can use it in the pre-market and after hours. Kind of get a feel for where this is going to open. So 3.93. Right about where I have this bar. So I'm going to be watching this for an inside day breakout, see if it's going to make it through, get above the level or not. It'll basically be the high of yesterday. So we're looking for an inside day breakout in the TNX to the upside. If we can get the dollar to also make that move to the upside, that'll drive the S&P to the downside. So looking at US dollar Japan, we've got this elevated, not yet testing that 137, which is a real critical resistance level. We've got this up and we got the yields up. We just need the dollar up. And that's not what we're getting, right? So this divergence, we had it yesterday too, makes things kind of difficult because what we've had a lot recently, you know, like last year into this year, was yields would go up, the dollar would go up, US dollar Japan would go up, S&P would go down. Well, now we've got the dollar down, yields up, US dollar Japan up. So the S&P and the 10-year are moving in the same direction. Damn it, man. All right, so Tesla's got a significant pre-market gap up. If we're looking for these gap up head fakes, like we had back here, then this is a beautiful setup for that. Just be really careful, right? They had that investors event this week. Meta's got a really interesting chart with this tight compression. So it's doing the same thing as the rest of the market with these gap up, drop down, rally back up, drop down, rally back up, but the range is much tighter. With Meta, if we can get an inside day breakout, that'd be a good alert. And then a trigger for a long would be if we can get 173.70. So we can get above that. Should have a nice run to 178. It's a really wide TRB on a lower time frame. So Nvidia's got this bull pennant right? It's really that 230 level though. Had earnings and made that big move. If you're looking to short this thing, it's got to get below that 230, and we can see why, right? All this had a nice little Busby. So old resistance becomes new support. The Busby is done though. It tagged, ran back up, gave us the top. That's all that it owed us. Now it's either going to complete the move and continue to move higher, or we're going to come back down and test this 230. I honestly don't think we can take another test of the 230. If we test it, we're likely to break it. Yeah, head fake, can't trust it. Google had a really tight range yesterday. I love seeing this, not just here, but I mean anywhere, especially a name like Google that usually can rock and roll, make some moves. This thing didn't do anything yesterday. And a market is just like nature in the idea that you can't contain nature, right? You have to let it out. That's why they let water out at the spillway when they dam up a bunch of water. You have to release the pressure or it pops. This is building pressure. Now it releases a little bit of that pressure when it wicks up and comes back in and wicks down and comes back in. Those are just like little releases of pressure. But the longer it stays in a tight little range like this, winding up, the more energy it builds. Now there's no promise in direction. That would just be too easy. But it does imply that there's a big move coming. Take this same thing and bring it over here, right? Very tight range. It started the day before, lasted all the way through the next day, lasted into the pre-market the next day, and then a big move. This is a really tight range, and Google has the capacity to move. I mean, this thing has got a really nice ADR. Now, Amazon, on the other hand, is a different kind of compression. Lower highs equal lows, building up into a tight little wedge. It'll be a very short duration TRB play, right? And for the TRB, it only owes us back to the top. So that's not real promising, but an inside day breakout beyond that, then we could target, say, 97. But this thing has been, a real turd lately. So I'm not overly excited on Amazon. If you do zoom out a little bit, like I just did, the TRB, the bigger TRB starts to line up. And for that, sure, we're looking at like 101. But individually, the daily movement on this thing is just really dried up a lot. The last I looked, Qualcomm's options are trash. But if you can combine it with some stock, then, maybe it wouldn't be that bad. A break below 123 should offer 118 to 120. Look pretty decent. We're just completing that rollover, right? Netflix. This thing has been a beast. It's crazy hard to trade Netflix. All right, we really don't have a play here until it breaks out. It's the old idea that we don't want to diddle in the middle. Focusing on yesterday's close, which is nearly perfect with the RTH open. So a break below 323 could be a play just back down to the low. The thing is, when you're trading in a range like this, even though you're trading on a pivot point and it's a solid play, you're still right in the middle of traffic. Like, price has every right to just move around in here all willy-nilly, all that it wants to. So, I mean, it is a trigger that would be a solid play, but it's a higher risk trade. And the goal would be back down to its low, 314.5. I would front run that low. I wouldn't try to get all of it, right? Like, try to get out at maybe 315, maybe even 315 and a quarter. I wouldn't try to run it all the way to back to the bottom. And keep your eye on Costco. We got a really nice setup here. So we're looking for a TRB, a break above 490 for an early entry, but I would like 493, right? A break above yesterday's high, that Globex high. You could retest, say, 501 for half of it, or 509. And the good thing is, if it doesn't go up, but instead it goes down, look for a breakdown. 848, 484.70. A breakdown below that level will target 475 and then 470. We're just looking for this to complete the next leg. All right, NASDAQ. How many names are up at least a 0.5%? 19. A couple of chip names, a couple of the FANG names. Other than that, not really impressive on this. For the S&P, 11. Yeah, and some of them are energy and banks. So yeah, I mean, that was like most of my day trading last year, energy and banks. And Goldman Sachs is in there this morning. All right, so looking at the difference between finance yesterday, where we had that nice gap up and then we just sold it off all day long, as opposed to, say, the monsters of tech, where we had that really big gap up. And sure, we kind of sold off at first, but then we set a low, maintained it through the day. It's worth bringing up because I do post pictures of this through the day. The cumulative tick. So the green line was leading the way in that push, that drive upwards yesterday morning at the open. And it ran it all the way up to 1030. And then we had a green line crossover. It's a huge heads up when we get a green line crossover. but I like to see the green line cross both sides. So not just one, but the other one. And then lead the way like we had here. So now the green is in control. It's leading to the downside, just like green was in control here, and it was leading to the upside. But then everything changed. So while this continued to point lower, the S&P just really didn't comply with that play. We never got our breakdown, right? We're looking at yesterday. We just couldn't get outside all that trash. Green line crossover, green line leadership to the downside. That's exactly what you want to see. So it wasn't a clear, solid short with a breakout of the range and a push and a drive to the downside. But it wasn't bad. And that crossover lines up with this crossover in the weighted AD, where we went through the zero line and got below zero. The thing is, the weighted AD never got below -500. If it had, and we had the green line leadership to the downside here, that would have been all the trigger we would have needed for a good, solid swing short, right? Like buy a put, hold it overnight kind of thing. A momentum in the driver as a surge for a play in that direction, but we just didn't get it. This isn't enough, right? It kind of stalled out, and then we just couldn't get the drive through. We did get some nice confirming plays, like the last hoorah before everything dumped over. That pullback right in here, when it finally stalled out and we dropped back down again. That would be, yeah, that one. So, it was rough. I don't think today's going to be any better if we can't get out of this range. So if you are tired of trying to trade in these big candled ranged markets where we're really not going anywhere, and you're finding this difficult, it's a real simple solution. Mark off yesterday's high and low, and if we're sitting inside of it, just go do something else. You're not missing anything. Trading with a lack of conviction in trash markets means you got to keep your position size small, and you're just struggling, right? And you're just giving it back, getting a little, giving it back. When you have a good, clear market and you can size up and really put some position on, you can get day done in 1 or 2 trades, make a house payment, and go do something else, right? So, yeah. Hey, everybody, be careful. Have a good day. Watch the news. We need a catalyst to get through this top, or we're not going to make it through the top, right? That's really all what it comes down to. And I'll see you all tomorrow.